Thursday, September 7th, 2023, Maneco 64, home of alternative economics and contrarian views. Today, we're going to look at how the Bank of England Governor, Andrew Bailey, has lit the fuse for further currency meltdown or devaluation and what that will mean for you. And this applies to the United States as well, to all the major Western countries, because they're in the same boat where they have massive debts and they have to keep inflating. But I'm afraid to say the UK and the Bank of England are probably the first ones to give up on trying to really fight inflation. And that term, to fight inflation, is a little bit, I would say, dishonest, because central banks and governments create inflation. I think what they're realizing is that, they can't keep the pretense going anymore, and they're just gonna go full speed ahead with further inflation. Before I start, yes, the gold and especially the silver market have been frustrating of late, but in an environment of inflation, in an environment where there is monetary mayhem like we have today, there's nothing better to protect your savings, not just from currency debasement, which is just the dilution of your currency. I mean, most of you probably know by now that 5-10 years ago you used to buy a lot more for £10. I mean, £10 is not going to change, but in 2-5 years time it's going to buy even less, while gold and silver are might not even go up that much, but they're going to maintain their purchasing power. And many of you, of course, have asked me many times in the past where they can get gold and silver. And I've got a few affiliates in North America and the UK. And if you want to find out more, go below to the description of this video. And again, just to let you know, the Mike and Mario show will be today at 5 p.m. London or noon Eastern time. It will be live. And tomorrow I won't be recording a video, but I will be publishing an interview I did with Elijah K. Johnson of Liberty and Finance. So that will come out tomorrow if you want to watch it while I'm in hospital doing my eye operation. So a lot of times I see people in the comment section saying, well, nothing's happening. You're talking about collapse for the last few years, economic collapse, and nothing happens. Well, maybe that's a good thing for these people who are saying nothing happens, because it means they've done the right thing and it's not affecting them. But if you look at the general picture out there, things are not good. Here in the UK, you had Birmingham City Council declaring bankruptcy, and it's the biggest UK local authority. And they're blaming something about a pay settlement, equal pay claim settlement. But there's much more than that. And I think this is just the tip of the iceberg. And why do I say that? Well, because the currency of your country, and that's why I like to focus on currency. And I realize that a lot of Americans, they don't really focus on currency, because the dollar has been the major reserve currency. So they don't care about, they even call other currencies like, the Egyptian dollar, even though it's another name. They think everything is a dollar, but it's going to come to the US as well. The currency of a country, especially the fiat currency, And even if it were gold and silver as currency, makes up half of all transactions, commercial transactions. So it's very important. If the currency is being diluted, if the currency is being debased, it's going to create a lot of trouble financially. And we're starting to see that in the UK. And of course, I even have a playlist entitled The UK Economic Collapse. And I started warning about this in July 2021. And even before that as well, mainly because we took on so much debt in the UK and had been taking on so much debt, especially after the '08 crisis. And currency debasement for the government is one way to default on the debt, because it means that the debt becomes less valuable and it's easier to carry the debt. But there comes a point where you destroy the economy by doing that. And I think that's where we are. And it's sad when you listen to the radio, LBC and others, and people blaming one party or the other. People need to wake up. It's Labor and Conservative. They're both the problem. It doesn't matter who's in power. They've created this monstrosity, this collapse. So, yeah, Birmingham City Council, I think that's just the tip of the iceberg. It's not just Birmingham. I mean, a lot of these councillors everywhere, they're on huge salaries. It's a gravy train. And now with interest rates going up, with the currency not buying as much, it's getting more and more difficult. What that is doing as well, it's seeping through the mortgage and rental market. And people need to live somewhere. They need to rent. And they're going to be asking for raises. It's a cocktail for disaster. And I've been speaking about this, of course. So I recommend you go to my economic collapse playlist. There's 14 videos there, and I'm going to put this one there too. And yeah, why has Andrew Bailey, then the governor of the Bank of England, lit the fuse for even more currency collapse or currency debasement? And I always like to go back to 2007, when the pound actually was relatively strong versus the dollar. It was up to, I think it went up to 2.11. So with £1 you could buy $2.11. And then you had the '08 crisis and the pound dropped to around 135, a massive drop. And then it recovered, but now it's falling back again. Last year, of course, we almost went to 1-to-1. And now I think after having risen quite a bit earlier this summer, it's on its way down again. I wouldn't be surprised if we see 1-to-1 in the next 12 to 18 months or even earlier. And all that does is that it makes it easier for the government to carry the debt, because a lot of the foreign earnings in dollars, for example, becomes more pounds. More pounds, it means more tax receipts. They can carry the debt even more. But everything becomes more expensive because the pound shrinks, because the dollar is still the major reserve currency out there, and the UK still has to buy a lot of its commodities in dollars. Maybe the UK could think about buying commodities in rubles. It might improve things, but then they wouldn't be able to write off the debt as much. So that's how currencies work. And the man on the street, of course, the average person out there doesn't understand that. And that's why I'm here to try to explain to you that it's got nothing to do with all the excuses they give you. In the end of the day is how much currency they create how much they dilute the currency, because the government and the banking system are the only people who can create this currency out of thin air. You and I can't. So before we get to Andrew Bailey, I want to go to the Bank of England chief economist, because I noticed, and this came out just over a week ago on August 31st, Hugh Pill, that's his name, and I think he made a comment a few months ago that was a bit insensitive. I forgot exactly what. These people live in ivory towers. They think economics is all about numbers and tweaking with them. They don't go out in the real world. So this is the kind of guy he is. He said, though, UK interest rates may not rise further, says Bank of England's top economist. Hugh Pill indicates he will vote to keep rates at 5.25% for longer, pushing back against market expectations. So that was the first signal. And yesterday, Andrew Bailey, who was an utter failure at the FCA, which is our regulator, and is now going to be, of course, a scapegoat for the failure of the Bank of England and the currency. Well, Bank of England will still be there, but the failure will be lumbered on us, the taxpayer. Of course, we're going to pay for it through inflation and through more taxation. But I think he was in Parliament. He was at the addressing the House of Commons. And it says here, BOE's Andrew Bailey casts doubt on need for further interest rate rises. So there you go. You've got the governor and the chief economist. They're on the same wavelength. So you can bet that they're preparing to pivot, in my opinion. Pound falls to 3-month low after central bank governor says UK economy is nearing top of cycle. So they must be really concerned, along with the Treasury, that things are unraveling economically. You've got Birmingham, you've got the housing market, rentals, everything is hitting the proverbial fan, right? And that's how I see it. So it says here, Andrew Bailey signaled the UK could avoid further interest rate rises on Wednesday, sending the pound to a 3-month low against the dollar as currency traders pared back their bets on higher UK borrowing costs. And he said there was a period where it seems to me it was clear that rates needed to rise, and the question for us was how much and over what time frame, but we're not, I think, in that phase anymore. So basically they're sacrificing the currency to keep the Ponzi going. Yes, to keep mortgage rates from going up, to try to keep these local councils from going bankrupt, because what that will do is maybe, because you never know, the markets might not like it, maybe keep gilt yields under control. We'll have to keep an eye on that. And what about what they call inflation, or the CPI? Well, I did a video last year in July. I think it was July 16th. And they've already kind of taken care of that. They've lopped off almost 1% from CPI. The government told the ONS to change the methodology going back to 1949. So the video is entitled Bank of England Flagrantly Fudges Inflation Data. So people need to wake up. They're not fighting inflation. They're trying to inflate as much as possible without people noticing it. And who knows, we might have an upcoming crisis this fall or autumn. And they will use that as an excuse for the inflation or the higher prices. You can bet on that. And they'll keep keep going on and on and on. But they might have an excuse, but this will still continue to shrink in terms of purchasing power, and that's what you need to know. Back in Roman times, they didn't use banknotes. They used denarius, the silver coin. And what the Romans did is they took the silver out and put base metals in. They kept a little bit of silver, and it looked like it was silver. But by the end of the 4th century, there's virtually no silver in it, and people knew that, and that's why prices went up, or base metal didn't buy as much as silver. But now they have this trick that they just print this and people think it's money, or they put digital entries onto your bank account, your deposit account, but it's shrinking. It's currency debasement. It's diluting the milk. And as I said earlier, it's half of all commercial transactions. So it's going to impact everything, everyone, every company, be it a big corporation, a medium size, a mom and pop business. The only people who's really going to help is really the government, because the government is up to here in debt and is going to alleviate that. But you, the general public, are going to continue to suffer. Generally speaking. Hopefully, a lot of you have been doing the right thing and have been getting out of debt, being stacking gold and silver, and yes, been living within your means. I'm not saying you're not supposed to enjoy life, but and also just knowing what's happening is a great step to fighting and protecting yourself. So I'm going to stop right here, and we're going to quickly look at the markets this morning. It's 8:25 a.m. London time. Gold this morning is up just over $1 at 19.18. High's been 21, the low's been 15, so a pretty narrow range. Silver still under pressure, is down 10 cents, 23.06. High's been 22, the low 04. The Dow futures is down 85. NASDAQ 100 future down 75. S&P is down 15 points. Sterling is down 1/3% now at 124.68. There's Rudy again. Rudy, be quiet, boy. I'm almost finished. The euro is down about 1/8 at 107.11. The dollar is down versus the yen 1/8%, 147.46. And the dollar is up slightly versus the yuan at 7.33. The dollar continues to, actually is down a little bit versus the ruble, trading around 98. Aussie dollar is unchanged, 63.80. The dollar is up slightly versus the Canadian dollar, 136.46, and the Kiwi dollar is up 1/8 at 58.80. To the commodities, WTI crude is down 0.5%, 86.67. Brent is down 1/3, trading just above $90. Platinum is down $5, trading around 910, and high-grade copper is down 1/3, trading at 377.50. So one thing that has kept gold and silver under pressure is that U.S. bond yields have been rising. The 10-year right now is just around 4.30. That's near the level of 4.33, 4.36. That's really important level. So we need to keep an eye on this. Am I saying gold is going to go down if these yields continue to go up? Well, I think there will come a point where if these yields really take off, it's going to hurt. It's already hurting stocks. It could actually get people to go onto gold, actually. But we'll have to see. Let's have a look at UK yields. The 2-year is at 525. I think yesterday we got up to 535. So Bailey's comments helped bring it down. And the 30-year as well, that's come off as well. We're back down to 480. So with that, I'm going to wish you all a very good day. Take care. Bye.